Hello guys, Dividend Enjoyer here, and today I'm going to be doing a full review of my $43,710 portfolio. Currently down today $242.75 on an unrealized basis, and down $988.88 on an unrealized basis. On a realized basis, up about 1750, not including dividends as well that I've accumulated over the year. But overall, doing a lot better than last week or last time I did a video because Salesforce has really climbed back a lot. I remember I was down at one point about 18%. Now I'm down about 6%. I think the momentum's going the other way. I still think it's undervalued for what it is. I really think that, this is just the first positive catalyst going forward. We're going to have more, and we're going to have more information to kind of support the bull case, I think, but it could go either way. I'm not a financial advisor, not financial advice, obviously. But Salesforce definitely showed in their last earnings that there's a huge demand for the agentics and that they're really going to be a big player in the agent sort of AI software. That's really the angle that they're going for, and I fully support it. And I really believe that Salesforce is going to be able to make some serious progress in this field. Next up, we have Apple, ticker symbol AAPL. Now, this stock has definitely been in my portfolio, honestly, towards more of the shorter end. Like, I haven't had this stock for as long as I've had Salesforce or Vici or Waste Management. And the reason I actually bought this stock was there was really an over amount of pessimism in the market for Apple. People believe that there was no growth left. I really believe that there's not strong growth, and I kind of think that maybe I should sell out here, but I also think I, want to own a piece of Apple forever. But when I'd bought it, I had done kind of my own DCF model and looked at it and said, at 210 or below, you're probably getting a pretty good deal just for the caliber of company that Apple is. I remember seeing, too, that the numbers were kind of saying it was more closer to 140, 150, but I think that's leaving out the fact that this is Apple and they can affect a lot of things. I mean, it's a lot easier to win the game. I'll say this, when you're more easily able to influence the game for you to win. And I think that Apple kind of has those powers that a lot of the Mag 7 companies really have because of their awesome market cap and just how big of firms they are. So I was very bullish on Apple for that reason at 210 or below. I had bought most of mine actually at 200, and I had bought about 15 shares worth of Apple. Eventually I was able to sell enough to make 650 in profit. And so I kept the 623 in my cost for these shares. And it's literally just like profit shares. They pay me about 76 cents a quarter in dividends. I just collect the dividend and I just wait. I might end up selling these if I want some cash or if I see like a really good deal. I've definitely been tempted to sell them, but I don't really want to pay the taxes on it. And I still want to own Apple, and I still kind of want to see what those shares would have done had I have held them long term, because I highly suspect that they're going to be worth a lot more money going forward. But I still think it was the right decision to liquidate some of them and take some profits, because you never really know what could happen. And it's a difficult thing to try to forecast a lot of the tech stuff. Sometimes, you get really excited, but you got to take a step back and really look at, like, are these profits real, and does it make sense that the company's going this way? I think there was a lot of also scrutiny and fear during that time for Apple about the tariffs, specifically with China and so much of their supply chain being over there. So I think that definitely hurt the stock. Next up, we have Take-Two Interactive, ticker symbol TTWO. This is what I've talked about a lot on the channel. I think that this is a very simple one. Really, you just have to believe in Grand Theft Auto 5 over delivering on what Take-Two thinks it's going to be and what Wall Street thinks it's going to be. I think that this project is going to be massive. There have been some red flags with the delays. That's definitely something that, you could hold against them, but I really believe that that delay was because they want to make sure everything's running correctly. And, the scale of this project is so unimaginable and large. You're really trying to account for things that have never been done. And I think that this game is going to have a lot of really cool new features and really push the limit of what gaming could be, and I think it's going to be very revolutionary. And I think it's really going to be the future of Take-Two Interactive, because this project and its free cash flows and the net income that they're able to get from this one project is probably going to fund their next couple of titles. It's probably going to fund the next Red Dead title, which I hope we get another Red Dead Redemption because I loved Red Dead 2. I think it's awesome. I think it's a wonderful game. I think Take Two Interactive long term is one of the highest quality publishing companies. I will be very shocked and very disgusted if Grand Theft Auto 6 is terrible. I don't think it's going to be. I think it's going to be a very strong release. I think that we're going to get a very strong title. And I really believe that Rockstar is going to do well. If you look at the past that Rockstar has had, it's been very strong. You can't really deny the amount of just momentum they've had in terms of the titles that they've released. They've really, honestly, they've all been bangers. So I expect Grand Theft Auto 6 will be even better than Grand Theft Auto 5 somehow. I remember when GTA 5 released, it was like everyone was playing that game. It was unbelievable. I think Grand Theft Auto 6 is going to be like the next level because people love Grand Theft Auto 4 as well. And San Andreas, people like a lot. I mean, every Grand Theft Auto title is just an absolute classic, awesome game. And I don't suspect that Grand Theft Auto 6 is going to be any different. I think that the amount of money they've invested, they're going to make something awesome. I really think the fans are going to enjoy it. I think that it's going to be an amazing thing. As long as they don't add too much microtransaction type of stuff into it, or if they're able to do it in a way that makes them a lot of money. Um, but, I would rather not have it as a gamer because I don't want to spend the money. But as an investor, maybe it'll work. I really hope that it's very high quality. That's my goal. As an investor and as a gamer, I hope that the game is just extremely good and is able to really help the rest of the company continue to move forward on the right path. Next up, I got MasterCard, ticker symbol MA. This one's a more straightforward kind of business to me. The transactions are the name of the game. I think that there's going to be continually more people entering the MasterCard ecosystem. I think that's the way that the trends have been pointing for a while. I don't really care as much about the crypto stuff. I know a lot of people want to hear about the tokenization stuff. I just trust that MasterCard has a very monopolistic position and that they're going to maintain it. I think that they're very smart for going down these other vectors, even if it's things I don't fully understand. As I understand, though, it is a very small part of the business, and the big part of the business is obviously the ecosystem of processing transactions. And MasterCard's been able to do very well, um, in my portfolio for doing that. I mean, obviously, I'm down right now, but, long term, the stocks perform very well. We're kind of hitting a weird rough patch right now where a lot of the tech's being kind of reevaluated. And then the market's kind of picking a few winners after they do very well on their earnings. I think we're going to continue to do well going forward because we're going to get a lot of rate cuts. Um, MasterCard, I think, is going to continue to outperform what people expect just consistently. It's going to be very boring, but it's going to make a lot of people very rich. And I want to be one of those people. That's why I want to own the stock. I really would like to add more of this stock now while I'm down on it from a DCA kind of perspective. But we'll see. I mean, there's also other things that I'm also looking at, but MasterCard is definitely one that I want to add more of, especially because I have a pretty decent position now in American Express. Obviously, I'd like more American Express too, and I'd like that cheaper as well. But I really think the better deal is MasterCard if I had to choose between the two right now. Even though I like the American Express business model better from a long term, I think that MasterCard is a very secure company. I also think Visa would be worth exploring. I definitely think that's something that I want to look at adding to the portfolio and something I've been thinking about adding because they seem like, I mean, I know that they're the biggest transaction company. I know MasterCard's second. And then American Express is way down in third because they also own their debt. So it's not like they're working with all these big banks that have existing clients. They kind of have their own list. So it's kind of a different company for that reason in that regard. Um, but I really like MasterCard here. I think that there's going to be more transactions moving forward. I think that you're going to have growing revenue, and I think there's going to be a very strong premium still on this company and on this business. And I want to be a long-term investor. I think that this is a very overlooked business that a lot of people aren't paying attention to, kind of like, the rest of the payment processing kind of industry, but it's a necessary industry. It's going to get consistent revenues. It's going to be a good business for a very long period of time. If you're a very long-term kind of forward-looking investor, I think that these payment processors are going to be good investments in, the very long term. And that's not necessarily just because of their past performance, but I think it is obvious that the growth is there in the network effects, and that it's a very strong monopolistic business that you definitely wouldn't want to bet against. I wouldn't want to bet against MasterCard. I wouldn't want to bet against American Express. I think they're both very strong, wonderful businesses. Moving on, next up on my list, I have Prologis, ticker symbol PLD. I'm very happy with this business as well. It's performed what second best, third best in my portfolio at 21.31%. Obviously, this is one I wish I would have invested more into, but I actually found this company when just researching different stocks that I could potentially do an analysis of, and I found that this was probably undervalued, so I bought it. Now they're doing all the data center stuff, which is, obviously bringing them a lot of attention. It's good for shareholder equity. It's, putting us on the map in that regard. And I'm happy to be a Prologis shareholder here. I'm just going to continue to hold it. I've been very tempted to sell in the past. I've definitely thought about selling my shares because a lot of these I got under $100, and I was just snagging those up during this, incredible buying opportunity of a year. I have to say, this year that's going to be its own separate video, but this year has just been a wonderful buying opportunity. I think when we look back 10 years from now, we're going to be saying, man, I wish we would have bought the dip in some of these, software companies before we saw the level of growth and just the success that they were going to have. So, um, moving on from that, though, Prologis is definitely going to be one of those companies as well that I think we look back on and say, man, this is something that, it's worth so much more. I think that it's very strong because it's very inflation proof. I think we're going to see a huge amount of growth here. I think it just, if you have a data center and someone with a lot of money wants to pay you for that data center to basically, um, they're basically really paying for all of the different things too, since it's a triple net real estate investment trust agreement. It means that the person who's actually leasing from Prologis is paying a lot of those expenses. And I think that's really good long term. I think when you look at these data centers, I think that we're going to have a lot of long term use. I think that we've invested a lot of money into them. And I think that we're going to see a new industry kind of emerge. It's going to be somewhat lucrative. I think it's going to be very similar to cloud computing. And I think that Prologis is right there to be able to capitalize on it. And, I think the growth is there. I definitely think that this is going to make them a lot of money. I think that there is some risk if you believe in an AI bubble. I think that Prologis may not be the type of REIT that you should pick up. And I also think there is a lot of hype baked into it now, which makes it a little bit difficult for me to want to buy anymore. But I have also seen a lot of times where a stock I like goes up 20%, and then I say I'm not going to buy it. And then it goes up another 20, 30, 50, 100%. And then I'm like, man, I wish I would have just bought when I knew I liked the business and I knew I wanted to be a shareholder for the long term, because then I could have had more for less. But, you never really know what price you're going to get, obviously. And I don't like the price now to buy. I'm just going to be honest. I think it's a little bit inflated from where I would like to see. But I'm also very scrutinous. I don't like buying a lot of different businesses. I'm very picky with what I want to buy and when I want to buy. I mean, it looks like I'm just getting hammered right now, but it's because I'm buying businesses that I believe are being undervalued by the market. And I think it takes time for those things to really correct themselves. Prologis is just doing a rock star job, though. I mean, it's doing amazing from where I bought, up again 21.31%. And I think it has very strong earnings. I think it's very legitimate at this price. I just don't think you're getting any kind of like amazing deal at this price, if that makes sense. So if you wanted to be a long-term shareholder, you want a high-quality logistics REIT, I think this is a very strong one. Again, not financial advice, but I think that this business has legs, if that makes sense. I think this business is very fundamentally sound and just very inflation-proof and very strong. Moving on to the next business on the list, though, we have Texas Roadhouse, ticker symbol TXRH. And this is probably the business that I believe maybe the most undervalued in the portfolio right now, other than maybe Vici and Salesforce. I think that those three stocks are really kind of the most undervalued that I have in my portfolio right now. But Texas Roadhouse is very interesting because I really just want to own this as long as they're able to create more restaurants each year, as long as they're able to grow the amount of restaurants that they have year over year and each quarter, and they're able to just increase the amount of money that each one of those restaurants makes. I believe that's going to cause a lot of success, and it's that simple. And I think that Texas Roadhouse has the growth. I think that long term, the growth is going to be there. I think the revenue is going to continue to catch up. I think they're either going to be acquired by someone else for some kind of a premium because there's going to be some kind of synergies to someone else owning it. But I do believe that they could also hit the spot where they become like a McDonald's, where they've opened so many restaurants that there's nowhere else to open. And then that's where I would probably make my exit. But I just want to hold this as long as they're able to open new restaurants. I think for this price, it's probably pretty cheap along with Vici. I think if you were thinking about getting into a restaurant kind of business. The reason I got into Texas Roadhouse was, I think that fast food is a little bit too expensive. And I believe that these more casual leisure chain restaurants like Texas Roadhouse, like Outback, like Chili's, I think they're all going to do very well going into the future. And I really think that there's a lot of momentum and growth there. I mean, I've seen it within Texas Roadhouse. I think they have the best growth numbers. It's either them or Domino's has the best growth numbers out of any chain restaurant. So from that, I just think that there's going to be continued good growth numbers. And I really think that Texas Roadhouse really is undervalued here. I'm just going to be quite honest. And there's a lot of volatility in the stock because it's a very small cap stock. There's not, institutional people moving money can definitely throw the valuation all over the place and definitely kind of tamper with what's going on in the stock. So, there's definitely a lot more movement than some of my other stocks because it's such a small cap. I believe that's why. But I think that it's objectively undervalued here, and I could be wrong. Again, I'm not a financial advisor, but that's just dividend enjoyers' gut thought on this because over time, I believe that if they continue to be able to open more of these restaurants in line with analyst estimates and increasing also, like if they're able to open more restaurants than what analysts predict, which I think will be the case because I think that should be the case. I mean, that should be their strategy is to be able to grow quicker than what the expectation and what people want. And that's pretty much management's job to maximize the efficiencies. But I believe if they're able to do that and they're able to do that correctly, I really think that the stock should be continually worth more and more money because the cash flows are going to be continually higher. Your revenue is going to be higher. And you should be more efficient as you get bigger because of economies of scale and because of just other things. And I think that there's a long-standing amount of money that can be collected here. And I think if you're patient and you're willing to buy into it now, you're able to get a good price and you can just wait this out. And eventually, once they have once they have a huge amount of locations opened, I mean, it's going to be more valuable as an enterprise because all of those metrics are going to be higher, just because there's more restaurants. I mean, it just makes more sense. And I really believe that in the long term, Texas Roadhouse is going to continue to be able to be very successful. I think that there's a lot of places that would benefit and support a Texas Roadhouse in their area. And I think that there's a lot of money to be made here in the long term. And I'm not normally a restaurant kind of person, but I think this one's small cap enough. And I think that there's enough strength and momentum going forward that this stock could perform extremely well going into the future. And I definitely want to be there for it and want to be an investor in it when that happens. Moving on to my next business, I have Amazon, ticker symbol AMZN. And there's not much more to say about Amazon. It's an amazing business. Obviously, I'm up 10.28% on it, so pretty good on a percentage basis. But I did sell about, I think, $650 worth of profit on Amazon. I had 17 shares at one point when I was up 30 something percent. And yeah, I sold out a little bit. I think it was at 254 per share that I sold my 7 shares at. happy that I sold them out and took some profits when it was just skyrocketing. It made a new 52-week high, and I had made a video kind of talking about how if it hit the 52-week high, I would definitely think about selling, and it was the right time at that point. But I do think that Amazon is probably undervalued for what it is when you really consider how important AWS is, how important the core underlying business is, how interesting and just monolithic the business is, and how powerful the business is. I think that this business is going to be able to continue to expand shareholder profits. They're going to be able to explore new avenues to make shareholders more money and to make more money for the business. And I think that Amazon in the long term is going to be able to return very, very positive returns for the shareholder. And it's why I'm a long term investor in it. I mean, I had shaved a little bit off, but eventually I do want to own more and more shares of Amazon again. I just thought that, it made sense to take a little bit off the table, and I wanted to own more kind of real businesses, in terms of more inflationary proof, just kind of less risky. Because I do think that there is a lot of risk in Amazon, just in terms of if things don't pan out the way they want them to. And there is always the chance that some of their investments may not go the way they thought they would go. That the like underlying business just doesn't perform as well in a certain year or something like that. And when there's a lot of hype and optimism, that's usually when you want to get out because it's usually when you're near the high. But I am also a long-term shareholder in this. Same thing as with Apple. Obviously, I haven't sold enough to fully cover my cost basis, but I've got a pretty good chunk of profit from Amazon. And I don't think I want to slip below 10 shares unless the stock goes to some crazy amount where I could cash out and find other sources within my portfolio that it would make more sense for that capital to be deployed in for that price on Amazon. I mean, there is obviously a price for Amazon where I would think about selling all my shares. I mean, it's not like I'm married to the company or anything, but um, it would have to be a pretty high price, and I would have to get a decent bit of money for it. I don't think here is nearly where I'd want. I think this is actually probably a pretty good buying opportunity. I mean, obviously we've had better buying opportunities, so you might be kicking yourself if you're buying it for this price, but if you can control at what price you buy and sell. I might buy a little bit more of this, even though I could have bought more when it was at $200 a share, but it is what it is. $26 premium. I think it might be worth per share to get some Amazon, especially if I'm willing to wait a very long time. And again, a lot of this stuff really just depends on your time horizon for how long you want to wait and, what you believe the business is going to be able to do. I think that Amazon's going to exceed a lot of the expectations because I think they have a lot of unfair synergies within the business. I think they're very monopolistic. But I could see where someone else might not think that way, and they might think that a lot of the things are being overhyped and that AI isn't going to materialize in the way that we think, and that's definitely positive too. So I could see both sides, obviously, but I really believe that Amazon is just very strong, and no matter what, they're going to be able to exceed expectations simply because of how strategic they are and just what they're trying to do. And I think the long term story is going to be a lot better than people even realize. I think the long term story is just going to get better and better and better. But moving on to the next stock in the portfolio, we have Uber, ticker symbol Uber. Currently down overall $53.71, but I have been buying up more of this. This is one that I definitely want to be adding a lot more of. I've made a lot of videos about it. I think that the growth is definitely going to be there. I think that the growth is going to be um, just crazy going forward. I think that the way society is moving too. I think that we're moving towards a more pro Uber kind of society where people are using Uber a lot more to get from place to place, and they're um, obviously incorporating Uber Eats. They're eating through that. They're getting the Uber passes. It's definitely something that a lot of people are purchasing and using to get from place to place and to, go all around. So I really like Uber. I think that Uber is a very strong business. I think that it has very good future growth going forward. I think that the revenues are going to continue to increase on a percentage basis. And I really think that Uber is very strong. I think it's the strongest in this industry. And I think that this is really their game to lose. I think that they're going to continue to be able to innovate, and I think they understand where the value's at. I don't really think I need to say that much more about Uber. I think everyone kind of understands that the business is very strong, and I think it also has legs. I think we're also going to see autonomous in the future. I think that's going to shake up the industry as well. And I think it's going to favor Uber. I really do. And I think that Uber is very, very innovative, and now they're very profitable. And I think that they're a very strong business. Again, not a financial advisor. Don't know how many times I need to say that. Probably don't need to say it again. But I really like Uber. I've been adding a lot more Uber. I think it's an opportunity, especially while I'm down in it. It makes me not feel as bad about buying more of it. And I think that this is definitely a business that I would like to have more of now. And it's going to be one that when it goes up a lot more, I'm going to be very reluctant to want to buy it. So it's one of those ones that I'm trying to add now while I still feel like I'm getting a pretty good price on it. But I could see why people would be skeptical. It's obviously, very, very competitive industry, and there's a lot of different factors there that could kind of disrupt the future expectations because the bar is obviously very high for Uber to kind of meet. And I think Uber is going to blow it out of the park. I think they're going to be very successful going forward. Next up, we got American Express, ticker symbol AXP. This stock is the one I'm doing the best on an unrealized basis, up over $800 or 805.78 or 28.58%. And again, I've talked about this ad nauseum. This is the type of business that you just don't sell. You just hold it for the rest of your life. It's got a pretty good premium on it. I don't think it's necessarily a good time to buy. Now, I'm not buying. Um, but I'm probably going to be kicking myself because I bet you the price is going to be a lot higher in the future, and it's probably going to be extremely difficult to get your hands on some American Express at this price in the future. I think that it's just a very strong business, very just amazing business that you want to be an owner of in the long term, in my unprofessional opinion, and a business that I've seen it drop. This year there was some good opportunities. Because I had been buying at around $300 for a while. It went up to 330. Then I remember it dropped all the way down to I think 230 or 235. I bought a little bit. I bought all the way down, even in like 270, 250, 230. I couldn't believe the deals I was getting. And I was saying, man, this is a stock that's probably going to be able to come back more reliably than a lot of other businesses. Just, I mean, the fear was that the affluent customer was not going to be able to spend enough. And I just felt like this business was so high quality and the clientele's good. And I really felt like they were going to be able to still continue to spend because usually they're still fine during a lot of bad economic times. Usually a lot of rich people still have their money, and that's how it showed up this time. I think that they're going to be able to continue to spend into the future, especially with lower rates. And I think that this business in the next 50 years, it's going to continue to be able to grow. I believe. I think, there could be a lot of different things that change, but I really strongly believe that American Express is going to be able to continue to grow and continue to make money because I think they have a very monopolistic, very strong business. And I really think the only one that's trying to challenge them in a really serious way is Chase with the Sapphire Reserve card. But you're probably going to have some customer overlap there where they use both American Express and they have a Chase Sapphire Reserve or whatever different card that's competing with American Express on that day. But I think that American Express has continued to perform very well and will continue to perform very well. And it's a very safe, strong, reliable business. So I'm a big supporter of American Express and a very happy American Express investor. Best stock in my portfolio right now. Moving on to the next stock in my portfolio, I have Waste Management, ticker symbol WM, currently valued at $8,537.12, down about $339.71 or 3.83% overall. Uh, this one I think is still probably undervalued where it's at now. I think it's still probably something that I could pick up more of, and eventually I'd like to get at least $10,000 invested in. I think that this business is very good, very inflation proof, able to grow uh, pretty consistently with good revenue. Yeah, they also benefit from economies of scale. I think that this is very valuable because of the landfills that they own. And, I really think that there's going to be continual high growth in this business. And I think if you're a long term investor, like I've been saying, you could really collect a lot of money. And my strategy from this one's a little bit different from a lot of the other ones because I'm really buying this one for the dividend compound annual growth rate, which I believe is around 10% on a 5 year basis. I could be off on that. But basically, Waste Management continues to grow their dividend by around 10%. Sometimes it's less, sometimes it's more. It just depends on the year, right? But they consistently grow the dividend, and I'm expecting that this dividend payment over time is going to compound and increase because I'm going to continue to reinvest back into Waste Management stock, and the dividend of those stock that's being reinvested and the existing stock that's there is going to increase over time. So eventually it's just going to snowball into a giant payment. And pretty soon my dividend payment from Waste Management will be, instead of 134 a year, it'll be like 500 a year over like, a 10-year period or however long it is if I'm reinvesting and doing everything like that. It could continue to grow and grow and grow. And that's kind of my goal for Waste Management, is to get a lot of my money in while I feel like it's a very good value, and then just be able to collect that dividend for the rest of my life. Because really, if I just stopped investing tomorrow and I had this Waste Management, eventually it would just continue to grow and I wouldn't have to do anything to it. I could just continue collecting a dividend, and each year that dividend payment would get higher because Waste Management would increase the amount of the dividend. Um, Also, the stock would also probably rise, but I would just continue to collect the dividend, and I would treat it almost like a pension. Obviously, it'd be taxed and it'd be different because it's one company, and it's all riding on Waste Management doing well. But really, the reason that I like this business so much too, just from an investor standpoint, is that you're getting that increased payment over time. So really, it's going to be negligible in the first couple of years, like $134. Yeah, it's really nice to get, but eventually that percentage is just going to climb and climb and climb, and the actual underlying stock is going to climb and climb and climb. So I think it's a pretty good time to get in here. I've seen the stock get as high as, I believe, 235 is the 52-week high, somewhere around there. I remember it getting really high for a minute. Um, then 210.23, I think you're getting a pretty good price. You're definitely not buying the 52-week high. So I think it's still a pretty good one. I was buying at 200. I put about $1,000 in, I believe, just to lower my cost basis, and I'm glad I did. I might be buying this one as well when I reinvest a little bit more, whenever I have some money to put in, but not really my hugest priority, just because again it has come back from being at 200, and I'm just reluctant to buy more. I'd rather just wait on this one and see if I could get a better price on it, because I kind of like the next stock a little bit more at the current valuation. And that's Vici, ticker symbol Vici. Currently, the shares are at 27.92 per share, and I'm down about $1,117.95, or 11.58%. And I think that's just because there's some fear on the consumer and the weakness there. And obviously, Vici owns a lot of the experiential real estate on the Las Vegas Strip. So if their tenants can't pay rent, obviously that's a big problem for the company. I don't think we're going to have that sort of issue here, though. I think that Vici is very strong, very secure. I think that Las Vegas is very strong as well. And I think that that type of real estate's just, it's worth a decent amount of a premium. I also think we're on the right side of rate cuts coming. And I really think that you're getting a pretty good dividend for the price on this stock right now. I'm going to be investing into this whenever I can. I think this is going to be like my priority investment. Number two would probably be Texas Roadhouse. Next would probably be probably tied between Salesforce and Waste Management. But Vici, I think, is just beat the most. And I think it's got a pretty good yield here. I think it's a pretty good price. I'd like to obviously add more and be really greedy while others are fearful, and just continue to add to my cash pile. It's paying me $550 a year just to hold it. and I intend to just continue to hold it and collect that dividend. That's the main metric I'm looking at with this stock. As long as they're collecting all their rent and maximizing the amount of money they're getting, I'm happy with them. And I really believe that this business is extremely strong. I think there's a lot of continued growth here. I like experiential real estate. I think it's a very interesting proposition, and I believe that Vici can continue to go forward. And I'm going to be a long term investor with it and see what happens. Next up, we got Salesforce, ticker symbol CRM, to kind of round out the whole video. I'm very happy to be a shareholder in Salesforce. I'm very happy I've continued to hold. I definitely was thinking about selling some of this when I was down 17% before this earnings call. But now, again, only down 6.23%. I think we're going to come back with Salesforce. I think that the business is finally starting to turn around, and I think we're going to have all of next year is going to be positive. I think it's been a very negative year to be a shareholder in Salesforce, and I think I'm really going to be rewarded long term to be a shareholder in this company because I think that the way they're using artificial intelligence and the way that they're really utilizing the agentics and just the agent platform is very extremely intelligent. And I think it's very niche. And I think it's something that should be valued very highly by Wall Street. And I think that Wall Street just lacks the fundamental understanding of what this technology is going to do and how big of a role this technology is going to play in business to business operations. And I think that Salesforce is really going to be able to perform very well going forward. Now, I've also bag held this stock for a very long time. I've invested over $10,000, and it's been a very difficult journey, especially, obviously uploading all of this to YouTube and showing my actual position. I've obviously been clowned on very much. Why didn't you just buy an index? Why didn't you do this? I think that this business is going to do well. I think that this business is objectively undervalued, even from where I bought it at. And I really believe long term that this business is going to be like a future Mag 7 name. I think that they're going to be able to carve a significant market cap out of this new technology that they've been able to develop. And the back order is showing that that's the truth. I think that we're going to have continued sales within Salesforce, and I think that Salesforce is going to be able to continue to expand and continue to grow. I think this is a very strong business, and I'm happy to be a long term shareholder. That's kind of my full portfolio. Let me know what you guys think in the comments section down below. I'm very interested in reading your comments. Thank you guys for all the subscribers. Have a great rest of your day.